morning. Hey there. My name is Betsy Barr, and I'm an agent with Symmetry Financial Group. And tonight we're going to be talking about one of the best products that we offer here at Symmetry called Debt-Free Life. And I'm especially in love with this program this week because my family and I are buying a house. Woo! So excited. And not only are we using our Debt-Free Life program to help us kind of get started, get everything we need for the house, but because of Debt-Free Life, I know that we are going to have this house paid off in less than 9 years.
Wow.
That's pretty sweet. So anyways, I am super pumped up. And so I'll let Jordan, you introduce yourself, and then we'll get started.
Yes. Well, I am Jordan Gillum. As you can read right here, it says my last name is Conkey. That is my maiden name, and that is how I set up my Zoom account. So that is a thing. I will have to fix that and figure out how to do so. I have been an agent with Symmetry Financial Group for about 3.5 years now. It has been the most wonderful 3.5 years of my life. And I'm just so grateful that this is something that we can do for families because I remember when I started Symmetry, they shared with me that I would be a life insurance agent, and that I would be offering different types of life insurance and that we would be able to protect a family's journey, vision, dental, Medicare supplement, long-term care, some additional living things. But this is one of the newer things that literally set me on fire with this business because I love the idea of helping people get out of debt. Right. Life insurance is basically you have to pass away and you don't benefit from it. Somebody else does. But what if you could have a debt-free life? So this is like one of the coolest things that we've been able to see is a product that actually helps people while they're alive have a better life. And I'm really excited about us diving into this today. And that's why we do it every week because it is our most favorite thing to talk about. So Betsy, you go ahead and kick us off.
All right. So when we talk about debt-free life, we like to ask people if they're 100% confident in their current retirement plan. And then just ask, what if you could eliminate all of your debt in 9 years or less without having to spend any additional money? And so that's what we're going to help you do. We're going to help you be confident in your retirement and also help you eliminate all that debt.
I do want to let you know, I don't see the PowerPoint moving.
Okay. It is moving on my screen. So
okay.
Let's see. So what we're doing here is we're going to be teaching you how to reduce the interest that you're paying to lenders, erasing your debt in 9 years or less. We're going to help you decrease your taxes, improve your cash flow, and then start saving money. And we're also going to help you retire with tax-favored income. And so now the important thing here is that this is not something that's like this random new thing that, oh, we just hope that someone might like maybe. This is something that's been going on for actually over 200 years. People that are very influential in the financial world have been very successful, been growing empires. They use this idea behind debt-free life, and they've used that to begin their empire, like Walt Disney, Pampered Chef, McDonald's, JCPenney, all these people that we know now to be very successful, they started off using the idea behind debt-free life. And so it's been around for a while. It's just using your money in a way where the numbers are going to work for you. And so my background is as a math teacher, and so I love numbers and I love people, and so this is just kind of a way to meld the two, and so I just kind of nerd out, and I love it. And so let's see, Jordan, are you still having trouble with the PowerPoint?
Yeah, I only see it on our initial Debt-Free Life page. I've pulled up the one that you have sent me, but it is missing a few pages, so I want to make sure I am in accordance with what.
Oh, of course. Here, let me do this. Does that, and now we're not screen sharing anymore, right?
Right.
So let's try this. Are you seeing that?
I'm seeing the full screen now.
The full screen of?
Like I can see your entire PowerPoint, like it says shortened DFL presentation up top.
Okay.
And the different options on the left.
Okay, now what about this? Are you seeing that with the growing empires?
Yes. I mean, I can see it like that, but I can still see the different slide options on the left. Is that how you're thinking I could see?
No, but why don't we just go with that? So since you can see that, and
Yeah, no, that's
We
fine.
want to make sure that,
Everyone understands technical difficulty,
hey,
so
for
this
real.
is how we will get it done. And so
Live
yeah,
it.
so we're really big on making sure that, you know, when we're sharing debt-free life, that we're covering all the bases. Because like Betsy was sharing earlier, we're debt-free life does a whole lot. But if you understand why it's important that debt-free life covers all the bases, you'll understand, you know, that there are different aspects of retirement and debt, becoming debt-free and planning for your future that does need to be taken into consideration rather than just a few of those things. So yeah, knowledge is power, but it's only power when you apply it. So let's talk about knowledge for a second. Let's gain some knowledge about our whole factor of life. So we do understand that there is a journey through life that we all go through. We do have this super cute picture that we have worked up here, and it is kind of relevant to the game itself. But this is more relevant to the average American debt. So, you know, you go through life, you go out of college, your parents give you a credit card, or you get your first secured card, and you start accumulating a little bit of debt, but then you graduate college and then they say, surprise, you have these things called student loans that have been deferred till today. So now you have to start paying us on something that you weren't exactly sure how much you would owe on until now. And then now you've got to have a car though, right? Because you have to have a car to get to work. So now you bought a car, there's an additional 20 grand of debt. Now you have to buy a house, you know, you have to get, and then you fall in love with someone and you have kids, and then you need a bigger car and you need to feed them. So there's a lot of times that we accumulate debt in our life, and that's okay. That's just a part of life. So we take a lot of the things in consideration about the different journeys through life whenever it came with debt-free life planning. Another thing that we want to lean into, we'll go to the next slide here. Here we go. Is the debt epidemic. So yeah, so as you can see, America has kind of accumulated some debt. And, and it's just because of the factor of how going through life is. As you can see, auto loan, credit card, student loan, mortgage debt. Right now, America is nationally in debt, $13.6 trillion in debt. So we take that, we see that as a problem. And that's why it's so important for us to do what we do every single week, because we want to make sure everyone has this information. A lot of, like we were talking about, knowledge is only power when you can apply it. So let's do this. Let's talk about here. Go to the next slide.
Yep, our average American household.
Oh, excuse me. I'm so sorry. I know it hasn't changed. So the average American household, I'm so sorry. So the way that money comes into the average American household, you're going to see, if you can see what she's got on her screen and not what I have on my screen, that about 74 cents of every single dollar goes to taxes and lenders and interest rates. So you're paying interest rates on credit cards, student loans. The student loan one was a huge surprise for me because that's not good. And then you've got interest rates on your mortgage. And when you accumulate all the interest that you pay, it makes up a large portion of every dollar that you spend. We're also paying 40% out of every dollar is going towards taxes. That's sales taxes, that's income taxes, that's self-employment taxes, wheel taxes in Tennessee. There's all kinds of taxes we pay, which is only leaving 26 cents out of every dollar to go towards the way that we live our life, which only 23% for most families have figured out how to live off of that in their lifestyle. That's paying for the things that we have, putting the food, there we go, putting food into our kids' mouths and stuff like that. And we're trying to put money into savings. So that's about 3 cents out of every dollar goes into savings. If you're managing yourself well. I know a lot of us are like, I haven't put something in savings in a minute. Hey, that's okay. No, we've all been there. And I know that when it comes to getting out of debt, when someone says, why don't you just save your money? Well, gosh, if you could save your money, you would have.
Yes.
So the average household debt is about $250,000, and this is how the dollars, the pennies, are being distributed in our life. So this is what Debt-Free Life has been helping our families do. So basically, we just make a shift. We take some of the shift away from, we're decreasing the interest that we pay. We're decreasing taxes that we're paying. Now, that doesn't mean we're not paying all of our taxes. We are paying all of our taxes. It's just the taxes that are owed are less. They're 10% less than what we would have spent without it. And then also that is increasing for our families' lifestyles because of the fact that they are on average having zero debt because they're living a debt-free life.
That's
So
right.
that money is going into your bank account and into your savings so that you can prepare for emergencies better, as well as live a more stress-free life.
Mm.
And so also, if you'll take a look here about the average American and between their fingers, what goes in and out of your fingers between when you start working and age 65, you will have $2 million touch your hands. You know, you think to yourself, wow, I'm a millionaire. Well, not really, because the average American, once they reach 65, only has about $60,000 in assets to their name.
Mm.
Now, I know that when I was envisioning my retirement and I heard the statistic, I didn't want to be one of those statistics. That's not going to fulfill my retirement plan. And I know for the average American, that is not the American dream when it comes to retiring.
Yep.
So I hope it doesn't fit y'all's retirement plans. I don't know how 60 grand would fit for you. I know if you had no debt, that 60 grand, you could have a pretty decent year, but not for the rest of your retirement. So that's what we're here to help with, is with helping, making sure that families don't fall into this statistic.
Mm.
So go ahead, Betsy, I know you would love to take on explaining how banks leverage cash flow. Let's educate some people.
That's right. So we kind of talked about, hey, this is how most households are set up with their finances. And so we're going to talk just a little bit about money and how it's used in different financial spheres in our world. So, of course, the main place that money flows in and out is your bank. And so when you go to the bank and you want to deposit some money, let's say you've built up some savings and you're going to put that in an account, and you say, hey, I want a really good savings account. And they say, oh, we got a great one for you, 1% interest. What? And so you put your money in the bank. Let's say you put in $100 for your savings. And so you're going to earn a dollar on that $100. You know, that's pretty sweet. But now the bank has got to make money. Okay. That's their business. And so what the bank does is, once you've put that $100 in there, now it's going to loan out that money 7 different times. Somebody wants to have a car payment, a car loan. Somebody uses that money for a credit card and 24% interest. Then someone's using that for a home loan. They're putting maybe 3 or 4% interest on that. Someone needs it for just, a personal loan, and they're going to put 15% interest on that. So the bank, you put that money in the bank, it's going to give you $1 for every $100 that you put in. And then they're loading it out at all of these different interest rates. And so the money that's flowing into the bank, because of compound interest, is higher than what it's paying out to you. And so this introduces us to compound interest. Now, I told you I was a math teacher, and when I taught algebra, every semester I taught compound interest. And so this is a great quote from Albert Einstein. Students always say, when will I ever use this? Okay, this is a great example. Compound interest is the 8th wonder of the world. He who understands it earns it, and he who doesn't pays it. And so what we do with this whole debt-free life plan is, instead of you getting only $1, 1% of that compound interest, we want you to be the one receiving the majority of that compound interest. And we're going to show you how you can do that.
I love that.
So first, you might be wondering, what exactly is compound interest? Okay, so let's do this little quick example here. Let's say someone comes to you and says, hey, I don't have I got some money on my hands. Let's do a little experiment. Would you like $1 million right now, or you start with a penny and double it every day for 30 days? What would you prefer? So most times when I did this with my students, they were like, give me the $1 million, which of course I did not have, but theoretically they said $1 million. So I'd have a couple that would say, I want the penny every day, doubled every day. Let's see what happens with that. So for the first 10 days, you see here that they're not pretty happy with their choice, because after day 10, they've only got $10. But then by day 20, because of this power of compound interest, you're doubling whatever you have every single day. By day 20, you're at $10,000. And then by day 30, you're at over $10 million. And so that's the power of compound interest. We want to use that to help you get out of debt and have the retirement that you have been planning and envisioning for your life. So, Jordan, let's get into some more specifics about this.
Right. So all that sounds good, right? Now we've got some knowledge under our belt. We understand how banks leverage their money. And then we also understand compound interest. And we also understand that America's not in a pretty sweet spot. And if we keep rolling the way that we're rolling, we're going to just be another statistic. And so that's not the plan. So let's talk about debt. I know that the first word in debt-free life is debt, so let's lean into it. Our goal with debt-free life is to minimize debt to create additional wealth. So let's take a look at this family here. The family that we have here is Mark and Joyce. Absolutely gorgeous couple. What we do with each family, right? So let's say that you're a family and you're like, listen, I'm in debt, right? So no duh, I'm part of the debt epidemic that we're all in. And I need some sort of rescue wheel thing, whatever those things are. I feel terrible for not knowing. But basically, I need help. I have no idea when I will be out of debt. And I also have no idea how to get out of debt. Like, I don't even know where to start. What we would do with you is we would say, okay, let's fill out a financial worksheet. And we're going to walk through Mark and Joyce's financial worksheet so you can see where they're currently at. And then you can see what we did to help them with debt-free life, because this is exactly what we do with each family. So when we look at Mark and Joyce's stuff, you'll see that they're a couple in their mid to late 30s. They currently bring in about $7,000 a month in income. They would like to retire on $5,000 a month, which, as we saw, they would only make it 1 year into their retirement if they fell within the statistic that Americans are falling into. They currently have 3 kids, and they would like to control their spending. They would love to save for retirement. They would love to eliminate their debt that they currently have. They would also like to provide for their children's education. And when we asked them, so what's your plan to do that? They said they didn't have one yet. And that's okay. That's totally fine. A lot of people they would love to be in the position to do those things, check the boxes that we were just discussing. But a lot of people don't have plans yet, and that's okay. That's why they're looking into a debt-free life. As you can also see, there is a retirement account that they have started. It does currently have less than 100K in it, but they're only in their 30s, so they've got some time. We also would we look at a family savings and investments that you currently have taken steps towards. So this family currently has an emergency savings that has an account value of around $6,000 that they contribute $25 a month. Remember, people are only putting away about 3% of their dollars. So $25 a month is going into savings. But then they're also taking $300 a month and putting it into that 401k. Currently, they have about $36,500 in there. And also, when we look at that, that's only about $150 bi-weekly, which is a pretty standard 401k. So that they're living a pretty typical route of which they're walking forward. But then we have to take a look at their debt, because savings is great, investments are great, their income is great. But we have to make sure that we can help them get from point A to point B, and there are some bumps in the way, and that's debt. So currently their debt, they have 2 credit cards. They have a Visa and a regular credit card. They have some dental and medical. I almost said mental and dentical. So I'm going to have to get my words in order. They have some medical and dental debt. They have an auto loan, a furniture loan, as well as their mortgage. And with their total combined monthly payments going towards their debts, they are paying about $21.77 a month, which is still pretty low compared to how much is coming in. And they told us when we asked them, hey, how much debt do you have? They said, we have $180,198 in debt today. That is how much we need to pay off. Now, their average interest rate amongst all of their debts is about 10%. So here's what happened. We went through with them and we said, okay, so you're only $180,000 in debt, correct? They said, yes. We put it into our calculator. I promise you Betsy would do the math, but thankfully we are blessed with software that will do the math for us. And when we showed them their real debt, this family is in a really tough, pretty common spot. They actually have an additional $199,000 of interest alone, of additional payments they're going to be making over the next 30 years on top of the 180 they currently have. So when you ask this family, how much are you in debt? They said 180, when in all reality, it's about 380. is how much they're in debt. Now, this is very shocking for families, but it's so important to understand because $380,000 can take away from a future retirement. That can get in the way of you accomplishing the goals that you want to get to. So how do we get in front of that, right? How do we make sure, like, okay, I don't want to pay that. I don't want to do that. I don't want to end up spending 400 grand on all of my debts whenever I only really should be spending 180 grand on my debts. How do I get out of that? How do I not be a part of this? So what we do is, also we need to look at Mark and Joyce's current retirement plan, because remember, they want to retire on $5,000 a month. How is their current retirement plan going to help them get there, right? So let's take a look at that too. They currently retire, their retirements right now is about $36,500. They're contributing about $300 a month towards that. Remember, about $150 biweekly. It's a 401k, so we do know just from personal experience right now that everything is fluctuating in the market. But let's just go ahead and call it an average interest rate of 5% over the next 30 years, guys. Let's say that that's what that 401k does. It grows at 5% every year, plus their $300 a month contributions until age 65. So we're giving them 30 years, right? So just for mathematical sake, let's say that they contributed into that for 30 years. And then let's also say that taxes remain the same from today to 30 years in the future, which if you ask me, based off of the total debt that America has, I'm pretty sure the government's going to ask us for more money every year to try to knock down that debt a little bit. Who am I? But let's just say that their tax bracket will be the same when they go to retire, because this is untaxed money that they are paying into their retirements, just coming straight out of their check, going into their 401k. So if they do that, they should retire on $408,000, which if you divide that by 5,000, 408 divided by 5,000, that'll give them 81 months of what they want to retire on, which if you divide that by 12 months, that's 6.8 years they'll be retired. They can retire the way that they want to with those kind of funds. But remember, they still have to pay 25% in taxes. So after taxes come out of that, now they only are retiring on $306,000. That's not really 100% within their goals. They're going to have to cut costs on themselves, on their future, on their retirement that they have been contributing for 30 years towards. So let's take a look at what Debt-Free Life did for this family. So with Debt-Free Life, we were able to help this family, instead of being in debt for 30 years, they would be out of debt in 7.8 years. They would be able to pay off all of their debt 22.2 years sooner than they would have without it. They were also able to save. They didn't pay $199,000 in interest. They were able to save $122,739 in interest payments. They were also able to increase their retirement savings by $2,200 a month, because remember, they were going to make those payments for a very long time. Now it's done. No moss payments towards lenders. So now what? That money just goes right into savings instead. So when you save $2,177 a month for 22.2 years, you increase your retirement by $1,004,387 at the end of those 30 years. That's incredible. That is incredible. And so then you've got to take into the consideration, like, what's the opportunity cost, right? Do I want to be like Mark and Joyce? Let's say that they chose not to, right? And they chose to go the path they're currently on. Their opportunity cost of not doing this is $820,458. Because even though they did save in interest payments $122,000, even though they did increase their retirement by $1 million, they still would have retired on $306,000. So that's where that opportunity cost comes from. And I can just tell you straight up that if you had to choose between being Mark and Joyce and on the debt-free life path compared to not on the debt-free life path, I know exactly what I would do. So let's talk about the benefits of debt-free life. You can achieve peace of mind, discover unused money in your budget, because that's where this comes from. This money to get out of debt is not coming from you taking out extra payments against everything else that you're doing. This is just from inefficiently used dollars going in a more efficient route for your family. You can maximize your cash flow, dramatically increase your savings. We love the word dramatic because I think $1 million is pretty dramatic, wouldn't you say? And so you get out of debt in 9 years or less. You learn how to prioritize your accounts and retire with tax-favored income. Because remember, guys, this is savings. This is money in the bank, not money in a 401k.
That's right.
So that's what's up. So let's talk about the big picture.
Yes. So here, this just kind of goes through a little bit more about what we actually do to create a debt-free life program for you and your family. And of course, it's very individualized. You know, we kind of need to just chat with you and see, hey, what's your financial situation? What's your dream for retirement? Everybody's got a different idea, a different situation. So we just want to work with you individually and figure out what's the best course of action for you and your family. And so like we just kind of mentioned here, we'll kind of look through your budget. Just like with Mark and Joyce, we went through, hey, what kind of savings do you have? What kind of debt do you have? What's the overall financial picture? And where can we find those dollars that are not being used to maximize making your retirement a reality? So we just want to kind of figure out, hey, where do you want to go? And now let's find the best way to get there. And so you might be thinking, hey, how do we actually do all this? And we'll go through all that a lot more in detail with you in person, but here's just kind of a general idea, okay? Let's say you want to buy a car and you've got $20,000. So one option, of course, that you can do is just take $20,000 and pay for the car. You're not going to have $20,000 anymore, but you'll have the car. So pretty good payoff there. The other option, not quite as straightforward here, okay? What you do is you take that $20,000 and you put it into a bank in a CD, and you're going to earn 4% on that CD. But now you still got to have a car. And so what you do then is you go to that same bank and you say, hey, I'd like to take out a loan for $20,000. And the bank says, well, that'll be 5% interest. Okay. And then you use that to then buy the car. So you might be thinking, why would we do that? And here's why. It's all about the numbers. So here, we just kind of see it straight up here. But if you notice, this CD for 4%, you're earning that compound interest. And this time the compound interest is working for you because you're earning more money each year because it's compounding on itself. And so at the end of 5 years, you've earned $4,300 on that $20,000. Now on your loan that you took out, you're paying it off over a 5-year period. And so the interest that you paid in total was $2,600. And so when you compare the two, you notice that the interest you earned is higher than the interest that you paid. So therefore, you've actually earned $1,600 over that 5-year period. So option B here is that you, at the end of 5 years, you get to have a car. You've earned $1,600, and guess what? You still have $20,000 that you originally would have had. So not quite as straightforward as just paying the money down for the car, but at the end of the day, you end up with a whole lot more. And so that's why we do this, and it's that same, we use that same basic idea for a debt-free life, except instead of you going to a physical bank and putting in money into a CD and taking out a loan, the debt-free life actually becomes your bank. So instead of, hey, I'm going to save up $5,000 and then pay off my loan, you're going to accumulate $5,000 in this debt-free life bank that's yours. All right. And you put that money in there taxed. It's already been taxed, so you don't have to worry about tax on it. It's earning this guaranteed 4% interest, and you can borrow from it anytime you like. So once you've accumulated that $5,000, then you just pull it out and pay it off. All right. Then you can pay yourself back, because then you're actually going to, the interest that you are earning is going to be higher than the interest that you're paying back. So then you'll actually earn money when you've pulled it out to pay off debt. It's insane. So you end up with no debt, still have the $5,000, and you'll earn a little bit more because you've used this method that's a little bit more intense, but it's a lot better for you financially. Again, it's making the numbers work for you and for your family. And of course, we help you with that whole process. You don't have to do it all by yourself. And so we just want to help you leverage these financial tools. And remember, these are things that have been around for over 200 years. People have been doing this. And I was like, why did I not know about this? And so our goal is just to help as many people as possible know about this, so that just, we keep talking about the average American family. So the average American family can be able to make these financial choices for them and future generations. So that's what we're doing here. We're redirecting those inefficiently used dollars. Your money is growing with guarantees. That's a pretty strong statement, and we can make that because it's true. Your money is going to grow. It is going to have guaranteed growth. You can borrow from that debt-free life bank, your policy. What it actually is, it's a whole life insurance policy. Sorry, we didn't actually say that. It's got an early cash value. That's why we're able to pull that out. So it's not, like your grandma's whole life policy.
Yeah, that ain't your grandma's whole life policy.
Really powerful policy. What it's using is the idea of debt snowball, adding in the compound interest, combining those together. And I mean, man, you're getting out of debt in 9 years or less. It's pretty amazing. So you're paying off your debts. You're going to keep getting that compound interest. You can finance future purchases. That's what we were able to do with buying our house. And then leaving a legacy for our family. Hey, my debt-free life policy, when I pass away, it goes to my kids, and they can use that, for their family. And so this is something that can create generations of wealth, and not just kind of for, just for the right now. And so, so as we kind of finish up here tonight, just kind of comes down to, hey, is this something that you're interested in? Is this something that you would like to see more for you and for your family? There's no cost, there's no commitment, just for Jordan and I to run your numbers, just to see, hey, would debt-free life be more beneficial for me and my family than what I'm doing right now? And only you can answer that question. And so we just want to support and encourage you as you consider that. And so we've got some other success stories of people that have used debt-free life. We want to be sensitive to your time here, and so we'll also just include the link to these. But these are families that have used debt-free life and that are getting out of debt in 9 years or less, increasing their retirement by hundreds of thousands, if not $1 million or more dollars. And overall, as we've been able to support families with
play the one down at the bottom left. That's the bottom left one. Is what I want. One with the lead generation.
Okay, fine.
Yeah, it's so good.
Oh no! Now we can't do it with the.
Oh no! Oh my goodness.
Okay, hey, we'll play it as we leave out. How about that?
Okay, that's good. It's a good one. That one always gets to me. I like that.
They're all amazing. But so, and you see here's a couple of other families that have been able to be debt free. But just in the past 3 years since we've been doing this, we've been able to save in interest $171 million for families, and then the projected retirement increase is $1.4 billion. And so, like I was saying earlier, I love numbers, but all of those numbers represent families and represent lives that have been changed, and just represent a whole new life, a whole new option, a whole new future for these families. And that's what we love. That's what we're passionate about. And so if that's something that you're interested in, we just love to see what this could do for you. And so you can sign up for a time to talk with us at calendly.com/debtfreeknox. And we're here every Thursday, 6 p.m. Eastern Standard Time. And so if you've got someone that you're like, hey, I think I know someone that would like this debt-free life thing, well, hey, bring them next Thursday. We'd love to chat some more. And so hang around as we just finish off tonight with a testimonial from a sweet lady who's been using debt-free life. and we'll look forward to seeing you next Thursday.
See if we can get this working. I would love to see this video. This is like one of my favorite ones.
Okay. Oh man, I gotta figure it out. Jordan, you want to finish off with anything?
Yeah, actually I do. Thank you. Actually, I wanted to share. I just actually got to help one of my dearest friends get debt free. She is on her debt free journey now, and it was surprisingly one of the most. I don't even know how to explain it. Like it's just so streamlined. It's so easy, and it blew her mind. Like she came to me once she heard that we did Debt Free Life, and she was like, "Tell me about it because I'm not going to lie to you. I am so stressed out due to my debt, and I honestly don't feel like I could ever get out from underneath it."
Oh.
And this woman wants to buy a home, and her debt is keeping her from it. And I love her so much. And the last thing I didn't know, we don't ever show that we're stressed due to debt. Everyone is feeling it. And as soon as she heard that, there was a possible outlet for her, she decided like, okay, let's see what this can do for me. And when we worked up her numbers, like I said, she didn't see the end goal. She didn't see the being out of debt. And when we ran her numbers, we found out how long it would take her. And it was going to take her 13 years to get out from under the debt so that she could be at a place to buy a house. And she's already 30. She doesn't want to be 43 buying a home. She wants to get there now. And she's got a great job. She lives in Denver, Colorado, in a beautiful place. And she is very well structured. It's just she's underneath this debt. So with Debt Free Life, we were able to help her very, very efficiently have a plan to get out of debt in 3 years. So we have eliminated her debt in 10 years sooner, and she's saving half of the interest that she would have paid. And she's also opening up her payments a month by $1,200 a month that she would be able to afford a mortgage with at that time.
Oh my word.
And then that gets me going. Like I was so over the top whenever we did that. And she was like, now we're doing this now. And I was like, hold on. Like I was in Florida and I was like, okay, sure. No problem. Like I'll help you out. I'm so pumped for her. So I wanted to share that because this is my most favorite thing. I love this.
So exciting. I love it. I just love it. Well, let's finish off tonight with another amazing story. Alejandro.
Okay, we are so excited. So what is your name, ma'am?
Alejandra,
Very good. And where do you live?
Miami,
You live in Miami. How much debt you carry right now?
around 500,000.
Okay. And if you keep going the way you keep going, how long is it going to take you to get out of debt?
Like 21 years.
21 years. And with debt-free life, how is it going to change? How soon are you going to be debt-free?
3 years and 7 months.
Wow. And how much of an interest are you going to save?
Around $100,000.
Wow.
Too much money.
Wow, over $100,000 on interest saved. And what is your current debt?
Around 500.
Around $500,000. That is unbelievable. And how about your retirement income? How much are you going to be able to save for retirement?
$3 million.
Woo!
Yeah, so big.
3 million.
How does it make you feel to be able
Wow,
to
I
debt-free
feel
life?
like God blessed me big time, and for me and my husband, it's going to be a big deal in life.
Wow, that's a huge change for life, and it was God's hands, and I'm so proud. I'm so excited for you.
Thank you. We are so thanks.
Hey,
Oh, chills.
what do you say?
Man,
That's
I love this.
so awesome.
I love this.
Love it.
Thanks,
All right.
Betsy. Thank you for that.
We'll see you next week. Bye.
See ya.